mean, when we first started speaking, maybe it was a light drum beat. Now it's super loud. All the talk is about embedded finance. Maybe you could talk about how you guys at Rapyd define that, and how you're expanding the definition globally.
Yeah, most definitely. So I just recently came back from Tel Aviv, where I was visiting our office, which is now expanded significantly. So I joined the company as employee number 10 in less than basically 4 years. We've grown to close to 400 employees.
Wow.
And I was sitting with a new group of joiners. And ultimately, I was describing to them how Rapyd came about. And Rapyd came about ultimately in 2016, originally trying to start a consumer-facing app that would facilitate the ability of people to basically have a multi-currency Venmo. And what's really quite unique is that when we made this shift in 2017 from being B2C to B2B, we really operated in a white label fashion for the better part of, let's say, a year without having a chief marketing officer. And I look back at what we used to say and how we used to describe ourselves, and we really struggled to say, well, what we are is we're the Twilio of payments, we're the AWA of payments. And it wasn't really until our CMO came in, a gentleman by the name of Mark, where I would like to say we were the first ones to coin the term Fintech as a service. And we were very, very purposeful saying is Fintech as a service, is not banking as a service. And we were also very purposeful to say that it's not embedded finance per se, because we do draw a distinction between the three. Why do we do that? Because one, first and foremost, we don't believe necessarily that all solutions have to flow through cards, so that we do support card payments, both for acquiring and issuing. Two, because we don't necessarily believe that all solutions have to flow through banking charters, particularly as you go internationally and see a decoupling of licenses and consequently diversification of the type of licenses that are available to hold and move funds. And lastly, because once you leave the United States, the vast majority of the world is really full with a huge diversity of payment types, and consequently leads to a massive diversity of use cases. So in our view, embedded finance at global scale really is about diversity, but at the same time, it's about localization. It's about understanding the nuances, and ultimately a partner ecosystem dynamic where you're working to provide a harmonization layer or standardization capabilities on top of best-in-class partners throughout the entire world.
So I appreciate what you're saying about making the distinctions between the terminology. And I know when we write about the space, we're not explicit enough sometimes. We kind of jumble them together. I agree that happens. So maybe you can help take us through how they're different. So why are Fintech as a service platforms well suited to enable embedded finance, and what makes them different from banking as a service providers?
Yeah, I would say that one, first and foremost, starting maybe with defining banking as a service as it typically has been defined today. Generally speaking, banking as a service refers to some provisioning of a bank account, although there's a variety of different types of bank accounts, whether it's a virtual account, whether it's a DDA, whether it's a prepaid card, whether it's a corporate PIN. At the end of the day, what they're generally focusing on is taking the existing product set of a bank and facilitating the ability of entities to embed those products into their respective platforms. And partially, the name also implies that banking as a service requires a bank. There's a variety of different financial services, or call it commerce enabling services, because I think we're ultimately talking about enabling of commerce, that don't necessarily require a bank. They definitively require a regulated entity to facilitate those movements of funds or custody of funds. But they don't necessarily require a chartered financial institution, and call it the American construct. Once you leave the United States, you have EMIs, you have specialized financial institutions, you have credit-only institutions. And consequently, when we refer to Fintech as a service, one, we're trying to respect this notion that the expansiveness goes above and beyond what is a banking product per se. The second reason that we draw a distinction is that Fintech as a service ultimately tries to imply that there's a variety of different use cases that actually are combining the pieces together of an otherwise disjointed solution. So we have a number of clients, for example, that are effectively coming to us and saying, I want to build a Sodexo-like product, meaning I want to build a semi-closed loop merchant ecosystem between buyers and sellers. I'm a software platform. I'm using classical definition of my ISV. I'm building a buyer-seller marketplace, and I want to be able to allow the buyers to top up their funds, but I don't want them to be able to exit their funds, but they should be able to buy across this ecosystem of suppliers. At the core of the Rapyd platform is the Rapyd wallet, and the Rapyd wallet can consequently be used to build a completely closed-loop ecosystem, effectively competing with Blackhawk and competing with the technology that's powering cards such as Starbucks gift card. But it could also enable these semi-closed loop ecosystems. And at the same time, it could also power completely open loop ecosystems. So the expansiveness of it really also tries to emphasize this notion that not all solutions will lead to a branded card, and not all solutions will lead to a bank account, and consequently not even necessarily a custodial account, aka something akin to what is PayPal. So that's where we draw the distinction. As far as embedded finance, we prefer to refer to embedded commerce to a certain degree, because at the end of the day, yes, financial services are about lending and moving funds and so forth. What Rapyd is ultimately doing is enabling commerce in a broader sense of the word.
Got it. So maybe you can help drive it home with some global examples of the apps that you power, and particularly ones that may be unique or different on the market.
Yeah, so I would say, to somewhat to use touching on some examples of the past couple of speakers is, so Rapyd is behind the Corner Shop card. Corner Shop is wholly owned by Uber at this point. And what we're enabling Corner Shop to be able to do is to issue cards. So when the shoppers are going to the supermarket, exactly the, call it Marqeta use case that they started off in the US with DoorDash and Instacart. But they chose us because we're able to do it both in Mexico and Brazil. And the way that we approach that is very, very different. So if you're just an issuer processor, you need to go find a BIN sponsor, you need to get connected to a switch, you need to get certified, and consequently your ability to deploy a solution as an infrastructure provider is likely a multi-year process. Rapyd was able to enter and deploy a solution in Mexico and Brazil simultaneously in less than 6 months, because instead what we're doing is we're partnering with best-in-class issuer processors and providing a standardization at the API level, but also in the reconciliation and settlement level. So that's a really unique solution. We have another client that what they're ultimately doing, a company called Lano, very similar to some companies that are perhaps well known here in the US, such as Deal, Remote Teams. They're a global HR platform. And what they're desiring to do is the ability to issue cards, deploy funds, meaning disperse funds to freelancers, collect the funds from their upstream clients, and do so, most importantly, in a way where they're not necessarily in the funds flow. And they're able to do that with us from Europe across the entire world. And then, of course, we have the very classical use cases of I'm a US merchant, such as a payroll company, or not a payroll company, but a student loan company. I need an ability to collect funds for facilitating payment of tuition. I do it in 3 countries, and now I want to do it in 30. And the pain that it took me to do it in 3 is just not worthwhile trying to go replicate that process for another 27 countries. So what's really unique about us when we talk to investors, we say we're a bit of inside the Rapyd platform. You have the entire ecosystem of what is alternative payment method companies, credit card acquiring companies, issuer processor companies, basically ledger as a service, which is akin to sort of what this Blackhawks are of the world. And on top of that, disbursement companies that are moving money all over the world. So, obviously the question is, why is Rapyd valued now at what is valued in such a short period of time? Because essentially what we have built is the platform that sort of solves all the other platform type of use cases through one single contract integration and technology integration.
Wow. So given that description of the different markets that you do play in, how would you size up your sort of opportunity size of your market?
I would say north of $1 trillion. particularly in light of the fact that we're making a very significant push as of recent into not only supporting, let's say, the classical use cases that many B2C and C2B companies have spoken about for the past couple of years. We can solve cross-border e-com very easily. We can solve marketplaces very easily. We can power other fintechs very easily. But what is quite unique about our platform is we can also enable B2B companies to also build on top of us. So we're probably at this point have the largest real-time payments network globally. We now support 50 different RTP networks for collect and dispersive payments. We support virtual accounts across, I think, a similar type of number, and also the ability to disperse funds at scale. So generally speaking, we have many disbursement companies that can maybe do a payment up to $10,000, but when a business is trying to move multiple millions of dollars, it's very rare that you can find the same set of providers to do that.
Got it. And what would you say, Eric, are the biggest challenges in building an embedded finance solution today?
I think the biggest challenge is really that all of the market is experiencing, just to make something very tactical, and then I could talk about something more conceptual, is the war for talent is real. It's a very real thing of the complexity that exists today for companies such as ours, and ultimately, in many cases, our clients. Now, ironically, the reason many of our clients probably should prefer to use us is because it simplifies the necessity of them to have to go try to build product and engineering teams to do these things on their own. But nonetheless, it's a very real thing that there's a significant war for talent in this space. I think the other significant challenge is, yes, it is definitively complex to figure out a way to manage so many different downstream partners, to manage so many different ways of moving funds, regulatory environments, and doing so in a way that makes it very transparent to the client. So our clients don't necessarily know that there's a fairly sophisticated, complex, call it spaghetti of interactions happening behind the scenes. And that's kind of the magic of what we're doing. But with that said, for the people that work at Rapyd, it can be quite complex.
I guess, follow-on question. You mentioned this war for talent. I know Rapyd is based in Israel and has entities around the world. How are you handling global talent management?
So we were very fortunate very recently to hire a global head of HR, a global head of people, a woman who recently came from a very successful Israeli company. But the way that we're really managing it is doing a couple of things. One, from a product and engineering perspective, we've done something that's somewhat unique. We haven't actually really formally announced it, which is also quite, let's say, profound, that an Israeli company has actually opened up a Dubai office. So we recently actually opened up a Dubai office, and we aim to build out a product and engineering hub in Dubai, something that would have been impossible to even think of 3 to 4 years ago, just given the nature of the relationships between those two countries. But for us, it was very important because it's very close to our engineering hub. It's a short flight. Culturally, it's very similar. So that's one way that we're trying to manage it. The other way that we're managing it, particularly in the overseas offices, is we've really embraced outside of Israel, because Israel is very much an office-centric environment. But outside of Israel, we now have people distributed throughout the world. When we first started, we really only had a California office. And now just in the Americas, we have people littered across, I think, 4 to 5 different states. And then as well, just respecting the fact that you can find great people in the markets that you're operating in.
One thing that we've heard from many of our speakers over the past day and a half is this concept of everybody becoming a fintech. And in some ways, it's sort of just bandied around as sort of truth. Do you think everyone becomes a fintech at the end of the day?
So I like being a bit of a contrarian ever since I was a little kid. I don't actually. I think that companies, no matter what, are in the business of making money, effectively enabling commerce. I think that instead what's actually happening is an expansion of the means of generating new revenue streams, and as well an expansion into new markets, whether that means new geographical markets or new segments. Rapyd is sort of rare in the sense that we're the probably one of the few companies in the world in this space that serve large-scale enterprise clients, commercial clients, as well as SMB clients. We have a variety of different channels to market, whether it is direct, self-service, or through channel partners, which is a new initiative that we recently launched. So when we think about the expansiveness of the market, we really say, is everyone really going to become a fintech? No. Is it possible that fintech as a service really does move the needle for a variety of different companies to enter into new markets or expand their existing market, or to a certain degree, just really diversify their revenue streams? Yes. But implying that everyone's going to want to become some type of regulated entity and deal with the complexities of it, that's sort of contrarian to what we really say. Because what we're really ultimately saying is your core focus is enabling the use case where you have product market fit, where you have a strong value proposition. Our job is to help you expand your market.
There's one topic I wanted to ask you about, Eric, and it's surprising we haven't actually touched on it over the past day and a half, and that's what happened with Google and its retreat from offering bank accounts. Maybe you could tell us what your thinking is about there, and how that might relate or inform what would happen with other platforms.
So it's impossible for us to really call it hypothesize of what was going on behind the scenes or what were they thinking. Although I can say that I can say we do know Google fairly well. I think that what it does perhaps indicate is you don't necessarily need a bank account. I think that's perhaps the message would be is opening up a DDA account is a fairly significant, undertaking. And yes, there are a variety of different companies that are solving that and very, very focused on solving that. But it's still nonetheless something that's difficult to monetize. Time and time again, you see in the prepaid industry has been around for a very long time. It's a hard nut to crack. Figuring out where the flow is coming from and where consequently the interchange is going to come from, and recognizing consequently that perhaps they will go about enabling commerce. I think their hiring of Billy from PayPal is a clear indication that they might be retreating from bank accounts, but I do not think that they're retreating whatsoever from enabling commerce using their platform.
Oh, that makes a lot of sense. I like that perspective. And then maybe we could look forward. Like, what do you think the industry looks like in a few years? Obviously, there's been rapid change over the past few. What does it look like going forward?
So things are moving very quickly. So I think back to the first time that Eric referred to AWS as a fintech and fintech as a service, and that was less than 3 years ago. So what does the world look like 5 years from now? That's call it rapid terms, that's relatively far away. But I think in the same way that now bank as a service has become a coined term, fintech as a service is now only probably in the last 6 months become very much a coined term. You're seeing research, you're seeing quantification of the market size really solidify within a variety of different professional services firms and media. So I think that 5 years from now, the dialogue will be about the globalization of these platforms. But I also think that what you're going to see is a consolidation. I think what many parties are going to realize is that it's difficult to go global. And even if you can crack that nut, that perhaps the traditional approaches need to be rethought. So I think you're going to see consolidation. And for better or for worse, I do think that not that the industry will compress, but I think that you will see a variety of different companies and infrastructure providers that just didn't get to scale and will either disappear or be consumed by others.
So Rapyd's obviously grown extensively since you joined. I have a personal question for you. Like, how have you as a professional been stretched and challenged in a company that's growing so quickly?
I think there's two different levels. One is, the professional element that would be, let's say, spoken about very openly in a professional context. And then there's also, call it the underlying emotional component. So I'll start with the emotional component. It is pretty profound and pretty, let's say, impactful to walk around the office, particularly since I've always been based in the United States, even though I was previously the general manager of the Americas. I was the first person on the ground. And I now go back to Tel Aviv, particularly after COVID, where we are unable to travel to our headquarters. and people don't know who I am. So there's an element, not so much of ego, but there's an element of, wow, I used to be someone that everyone knew. I continue to be known, obviously, by the executive committee, but there's people that, let's say, even security might stop me, and that is something that it took me some time to wrap my head around. I think the second is when you're going from being a 10-person company when I joined to now north of 400, where you get stretched is ultimately, how do you continue to remain motivated? How do you continue to recognize that this is a marathon, that this is a long stretch, and as well that remaining true to what was the original vision. In that same talk that I was mentioning at the beginning of my discussion now, I put up a slide from 2019, or maybe late 2018. I said, here's a pitch deck that we brought to a Fortune 500 company describing everything that Rapyd could do. And a significant percentage of it in 2018 didn't exist. Fast forward 2021, and I would say about 95% of what we thought we would, or what we were selling, or what we said we had built, now actually exists. So I think another challenge is remaining true to the original vision, particularly as you get real clients and clients have demands and they ask you for things, and making sure that you don't build for them, but you're actually building to your original vision is a challenge that the company is always going to experience. Amazing. It sounds like a wild ride. Eric, thanks again. Thanks for dropping by the Big Bank Theory and sharing your thoughts and sharing on embedded finance and on Rapyd. And it's great talking to you. Thank you very much. Good to speak with you again.